Why, hello there. Good meowing, good afternoon, or good evening, whatever time it is for you. Thank you so much for joining me, and welcome to tonight's talk session. Because it's kind of a stream, it's kind of just casual, it's whatever it's gonna be. I have no preconceived notion of whatever the heck's gonna happen here tonight. Incorrect. Well, I guess we'll just start off with the basics. Hello. Hi there. I'm Prince. You may be wondering, Prince, what makes you qualified to speak on this topic? To which I have to say, lots of stuff. I've been working in financial related items, whether that be tax returns, tax preparation, tax planning, IRS representation, bookkeeping, general record keeping for businesses, for 10 years now, actually. And if you do the math and know how old I am, yes, I've been doing this since I was 13. Got started young. And so my actual day job is doing taxes. So it's currently tax season. I personally do, at the company that I work for, whatever. Y'all aren't coming here for my English ability. At the company that I work for, I actually do quite a lot of taxes. This year I currently have at least 100 returns on my plate, and I've done about 100 or so returns every year for about 3 years now. Well, 100 years. No, God, no. Not 100 years. Not even the slightest. 100 clients for 2 years in a row, and this will be my 3rd year with about 100 clients. Oh, of course, everything is still fucking popping off. I'm glad that people appreciated my addition to that thread, because I was thinking about it when I saw it. I was literally sitting at my desk at work, and I was like, oh, I need to say something too. I need to put in a little bit of 2 cents here, because I have a very unique viewpoint on taxes and stuff, in that I am both obviously a VTuber and a tax preparer. I got off topic. Yes, taxes that I work with. I've prepared personal returns, all the way from the simplest 1040, which is one person with a single W-2, renting an apartment with nothing else going on, all the way up to the most complicated client that I work with that's US only. He has about, or no, it's not, yeah. He has about 12 rentals, and close to probably about 20K ones. If you don't know what those are, don't worry about them. Don't worry about it. It probably doesn't apply to you if you don't know what they are. If you do know what they are, you understand exactly what I'm talking about. I also work with international. I've done multi-country return. I've done returns for people who live in multiple countries, have assets in multiple countries, worked on a couple F-bars. Those are always fun. And I currently work mostly in actual corporate returns. I do 1065s, 1120Ss, and 1120s themselves. I've also done a couple trust tax returns. I've done one simple and one complex. Trusts are not my favorite area. But yeah, I do a lot of taxes. It's my day job. Do a lot of it. But yeah, I saw that and I was like, oh my gosh, a lot of VTubers, a lot of self-employed people in general don't understand exactly the tax implication of being self-employed. And it's really big. It's really big. It's a very important thing to be aware of. And so, yeah, as I say, I have no fucking preconceived notions about what the hell is going to go on in the stream. It's probably just going to be me chatting to myself, let's be honest. But I could talk about taxes for a while. They're really intricate and they're really complex at times. And, you know, the US tax system is the most complex in the world, so there's a lot going on in it. But mostly, see, I came in here without any sort of like plan of what I was going to talk about. I was just going to kind of talk because I do that. Like if you've been to any of my streams previously, you know I can just get off on tangents for no reason. But yeah, let me pop right here while we're on things. Yeah. So this is the IRS's website. Everything that I talk about, you basically are probably you're pretty much gonna be able to get from irs.gov. It's a very helpful website. Sometimes it's a little to navigate, but it's a great place to get, you know, legitimate information. Oh, I do have to say, I'm gonna probably repeat this quite a couple times. I can't give tax advice. I'm not licensed for that. I do not have the license that allows me to give out, here's what you're supposed to do about taxes. What I can do is share information. Like where things are on irs.gov, reading pubs and saying, hey, this is what this means and here's what this is. So I can't tell people like, oh, in your situation, I would do X. I can't say you should do X. I can say, here's what I've seen. Here's what I've experienced. Here's the information that I have. Here's what's legal and what is not. And that's kind of it. So if you're like, hey, what do I do with XYZ? I'm going to be like, I would go talk to a local tax professional in your area. A lot of, and you know, like, I'll be honest, a lot of people in this field, in the financial field, are a little old and curmudgeoning. And most of them won't understand just about anything about being a streamer. But if you ask them some questions about like basic tax law, even if you're not like, hey, I'm asking this question specifically because I'm a streamer, you'll get an answer. You may have to pay. You probably will have to pay people for their time and energy and knowledge. That's the word I was looking for. Let me see if I can remember how to get to the IRS's. Yeah, the IRS has a bunch of that's less than I expected. IRS does have this. Is this the? No, this is the one specifically for tax professionals. Gee, thanks, IRS. Oh, where is the? Oh yeah, I guess we could talk about the Taxpayer Bill of Rights real fast. So, the basic ground rule that I end up telling a lot of people is you cannot commit fraud accidentally. You can't. You just can't. The committing fraud means you have to know what you're doing is wrong. Like, know for a certain that it's wrong, that what you're doing is wrong. And you can't, if you don't know, you can't do that. So you don't have to worry about, oh, what if I'm committing tax fraud? You're not committing tax fraud. You're not. People who did commit tax fraud are like Al Capone. They knew it was wrong. speaking of Al Capone, I'm just gonna go ahead and say this. If you have illegal money, if you get income from an illegal source, the IRS expects you to report that income. As far as I'm aware, they don't then reach out to any authorities. But if you don't pay your taxes on income, that is, that's the big one. That's the big one. Or you don't report your income, etc., etc. But even if you don't report your income, there are still steps that the IRS has to go through before, you know, any sort of legal proceeding or anything could happen. In fact, the IRS basically has to inundate you with letters for a while. And like, I know someone who has received, they receive probably about 10 letters a year. And because they owe back taxes. And they just keep getting letters. And it's been it's been a while. And they owe those taxes. Nothing's happened. They just get letters. So a lot of the time, the IRS will not contact you via email, via phone, via text message, via social media, and it is extremely unlikely that they will come to your door. The only time that I've heard, there's one time in my entire time working with financial stuff that we've had someone who had an IRS agent come to their door. And that is because they owed a lot of money. And the IRS had gone through their little paper trail of letters for a couple years trying to get the money. So don't ignore IRS letters. Find a tax professional. Find an office that does IRS representation if you need assistance. Don't let them sit. They're not things that you should let sit. So the basic Taxpayer Bill of Rights it's pretty basic, but it's really important because these are your rights as a taxpayer. They protect you and keep you safe. And make it so that, unlike in the whatevers, in I think it was like the 50s or something, when the IRS could just take your shit and pay. No, they can't do that. Now, because of the Taxpayer Bill of Rights, there is a pretty long sequence of events that they have to go through. So you, and possibly, obviously, I am speaking specifically on US citizens. That's what I work with, is US citizens. So I don't know anything about other countries' taxes. Despite, doing international taxes, I always deal with the US side of things. So I don't know about other countries and how they deal with stuff, but yeah, this is only for US. So basically, your IRS Bill of Rights is you have a right to know what to do. Pretty basic. You have a right to be informed about whatever the IRS is doing in your account. So if you get a letter that says, oftentimes, a lot of people last year got a letter that said, hey, we've changed your refund because you said you didn't receive this stimulus payment, but you actually did according to our records. So that is the taxpayer's right to be informed about what happened in their account, what happened to their tax return, all sorts of stuff. The right to quality service. Okay, I have to laugh on this one simply because I work with the IRS every day. They are currently extremely backlogged. extremely backlogged. If you do not have to mail something into the IRS, if it is not like if there is no, how am I trying to word this? If you can submit something to the IRS digitally instead of mailing it, do it digitally. Do not mail it if you can help it. I want to say their last number I remember hearing was 9 million pieces of mail behind. Last time they got this backlogged was during the shutdown a couple years ago. Trying to think when was that? What shutdown? When was that? But the IRS got extremely backlogged. There's literally trucks of mail. And so the IRS is extremely understaffed, extremely underfunded, and they're doing their best, but we can still be upset at them. So you have a right to quality service. You can call the IRS, receive an agent. If you speak another language, they'll do their absolute, their best to get you someone who speaks that language. Yeah, my office always deals with the preparer side of the IRS line, and that's a challenge at times. Your right to pay no more than the correct amount of tax. This is where you can argue with the IRS if they come back and say, hey, we changed X, and you can say, actually, no, that's not correct. We had a person who sold a house, and they qualified for the primary residence exemption from capital gains tax. If you don't understand that string of words, don't worry about it. Basically, when they sold their home, they weren't going to get taxed on it. And the IRS came back and said, hey, you didn't report this home sale. Now you owe tax. And we said, what? That's not right at all. And basically we sent back, the proof of here's what happened. And the IRS came back and said, yeah, nope, we made a mistake. You're all good. Sometimes payments get messed up in the IRS's system because there is a human working in the IRS matching payments to people. And we had someone who had a payment. They had the proof of the payment. And the IRS was saying they didn't have that proof. And we said, nah, here's our proof from your site, from your payment that shows it got through. Here's the number and everything. And they went, oh, yeah, no, you're right. That's our fault. We've credited your account. Which swings right down into the next portion. You have the right to challenge the IRS's position and be heard. So you can't say, hey, no, wait, IRS, I don't agree with that. And the IRS can't go, too bad. The IRS has to take into account what you're saying. And if what you're saying is simply, I don't want to pay it, the IRS can go, you gotta. Sorry, you gotta. Or they can say, oh, no, you have a point. If you bring up, a valid point other than just, I don't want to pay it. Yep, and then you have the right to appeal a decision. So if you say, hey, IRS, I disagree with X, and the IRS says, well, after our internal review, we disagree with you, and we're making a decision that we are correct. You can go out to the Office of Appeals and deal with that. And then you have a right to finality. This one is big. If you are audited or the IRS is looking at a tax return, previous year's tax return, you have a right to know when they're done. So you're not just left in limbo forever. And this one's really important because sometimes the IRS's wires get crossed and the left hand doesn't speak to the right hand. and suddenly you're receiving letters for something that you thought was done, and you're like, hey, no, wait, my right to finality, is this done? And they go, oh, oops, yes, sorry, this part didn't speak to that part. The usual, you have a right to privacy. They're not gonna, if they're auditing, you know, your business, they're not gonna ask to, you know, see all of your like underwear receipts or anything like that. Unless you have a business selling underwear. Look, IRS doesn't care. They just want to make sure that you're reporting all of your income and paying all of your tax. You have the right to have a representative represent you when you're dealing with the IRS. That's a lot of what we end up doing in my office. A lot. We have a fair bit of it that is large, specifically because we deal with a fun thing called offer and compromise, which is telling the IRS, hey, these people, yes, they owe like $300,000, but because of their economic state, you're not going to be able to get this money, IRS. Here's the most they can pay you. And I'm really simplifying it here. It is like a multi-year process. But if you have a good case, and someone who can argue it, and you have all the facts to back it up, sometimes you can get a $300,000 IRS debt, not erased, but extremely reduced. And then you have a right to a fair and just tax system. So the Taxpayer Advocate Service basically is it's separate from the IRS. And it basically works with taxpayers if they feel like something not right is going on with the IRS, with their dealings with the IRS. And they can request the Taxpayer's Advocate come assist, and the Taxpayer's Advocate, if they have enough staff, will assist if they feel like the case is something that they should be taking. We've actually had quite a few dealings with the Taxpayer's Advocate recently in the past 6 months. So yeah. So that is the Taxpayer Bill of Rights. That's really important, and not a lot of people are aware of it. Yeah, so you can say local Taxpayer Advocate. So you can see, like, let's say I'm in South Dakota. So here's the Taxpayer Advocate in South Dakota, their office, and all that. So let's say if I wanted to go to the Taxpayer Advocate, I could. Don't know why you would want to go to the Taxpayer Advocate. They are kind of your last stop. Let's see. So, yeah. So here is where you'll get a lot of information. Is tax information for businesses. Because, guess what? Self-employed. We got a business. So, small business and self-employed. So yeah, this is resources for taxpayers who file a 1040, schedules C, E, or F. That's basically what we're going to be focusing on for right now, because I highly doubt anybody watching this has an S Corp. If you do, I hope you have a tax advisor, preparer, planner. I hope you have a tax person you can call on, because S Corps are a whole different beast. Same with partnerships, and if you have a C Corp, God help you. I work with 2 C Corps, and I hate working with both of them. The forms are finicky, and the rules are... I don't hate the clients. I hate C Corps as general, just dealing with them. Mostly because people get them confused with S Corps, and then you have to panic as you try to figure out if a customer formed a C Corp or an S Corp, and those are different beasts. Hello, cat. So this is where you'll find a lot of information about C Corp, Schedule C's. Schedule C, self-employment, that kind of stuff. Also, if you have a rental or a farm, here's where you will look. Yeah, so information about self-employed, independent contractor, business structure. Yeah, stages of owning a business, general topics, small business tax workshop, how to file and pay your taxes, preparing your taxes. I'm not going to touch on employment taxes because we don't do payroll and we refuse to touch it with a 10-foot pole because payroll gets finicky. The IRS is really stringent on payroll and payroll taxes. So if you're paying payroll, recommend that you use a payroll processor that has good, good history, is a well recommended, well reviewed, well established business. I wouldn't do Joe Schmo's payroll down on 4th Avenue or whatever. So biggest thing I want to show is a Schedule C! Surprise! So, I'm going to address what I talked about in the post. So, Schedule Cs are basically the form that you file as a self-employed person to say, here's my self-employed income, here's my self-employed expenses. So, let's fill it out together as a faux tax return. So, name of the proprietor. Hello, I am Prince. You would put your full name, but then you have to put your social security number. If you are doing this through a tax preparation software, a lot of them will just have questions that you answer and it fills out the spot. But if you're doing this by hand, we're gonna do it together by hand. So my social security number is, XXXXXXXX. I was like, wait a second. 4 letters and 4 numbers at the end. All right. My profession. My profession is streamer. So, business code. This is where doing it by hand is a little persnickety. And it's always, I always use software. I've been using software since I started doing taxes. But basically, the business code is, the IRS has this big long list of numerical codes that line up to specific business types. So, like, you have one for agriculture fruit farms, and one for engineering consultancy, or I think it's like consultancy on like engineering in the sciences or something. And basically those codes just tell the IRS, these are going to be the general kind of stuff you're looking for. So let's say I had my business code as a fruit farmer, and in my expenses, I've got like games and computers and stream supplies. The IRS is going to go, hey, now wait, what? And they probably will come and ask you a question. Possibly. It's a possibility that they'll come ask you a question and be like, excuse me? Or they could come and audit you. Worst case, we'll audit you. We actually dealt with one client who had an audit. We no longer work with that client because of the exact reason they got audited. And I'll get to that reason in a little bit, step by step, Prince. So, my business name is Prince's Cool Streaming Service Channel. We're not streaming service, we're channel. So, we're gonna say my business code. I'm gonna put in an actual business code, except this is the etc. of business codes. And it is not recommended to use this code because it just kind of, it is a reason for the IRS to look at you. And if you can avoid obvious places to flag the IRS in your direction, all the better. So I'm gonna go put myself under the other code. So this is 99999. I have actually seen tax returns with this code. It's always something that throws up flags in our office. I do tax return reviews for clients, new clients, and I'll literally sit down with their tax return and write down everything I see that could be incorrect, something we want to look at, something that brings up concern, something that makes me go, what? Or things that I just think are important. And every time I see that, etc. code, that 9999, I always mark it down and be like, Here, let's zoom in a little bit. There we go. That's better. That's better. So my employee ID. So if you don't know what this is, you don't have one. If you know what this is, you possibly have one. An EIN, or employer identification number, is basically like a social security number for businesses. It is the special little number that is their identity for the IRS. There is no EIN lookup, just like there is no social security lookup. And you do not, and unlike social security, EINs are not just granted out willy-nilly when a business is started. You actually have to go and apply for an EIN. And in EIN, you will need an EIN if you want to make a business bank account or, start a business PayPal, or what's the other one? I'm trying to think. Or the biggest one, have an employee. Otherwise, you don't really need an EIN. So let's say, I don't have an EIN, so I'm going to leave it blank. Prince's Cool Streaming Channel does not have an EIN. So my business address, this is where the business is located. It might be my house. It might be a warehouse 20 minutes down the road. Wherever the business is and primarily does business, that's what they want. So we're going to say my business address is 123 Sesame Street, located in New York. I don't know the actual zip code for New York, so 100100. Pretty basic. Accounting method. Here's a quick rule of thumb. If you don't know what this question is asking, you're cash. Cash. Don't click accrual if you do not know what accrual is. Do not click other if you do not know what you're talking about. You will regret it, unfortunately. It's a different type of keeping track of your money in, money out. If all you do is, I paid money out, I put it on my little spreadsheet, and you should be keeping a spreadsheet, you're cash. I made money, put it on my spreadsheet. I paid something, put it on my spreadsheet. You're cash. You'll know if you are accrual. If you are accrual, you will know. Because it is likely that you're making either A, a lot of money, or B, is something required by your whatever. So, did I materially participate in the business? Did I, myself, work like 500 or so hours? And you might be like, well, Prince, how do you know what material participation is? Well, you go up here, and in the nice little search button, you put material participation, and you search. And sometimes it doesn't give you what you want. And you go, well, crap. And that's when sometimes you have to search up on the internet and you have to vet your sources. Or you just ask a handy dandy trusty tax professional. But it's about 500 hours or so where you are the one, your material participation is what makes the money. So if I did not exist, Prince's cool streaming channel would not make money. So yes, I materially participated. Did I start or acquire this business during 2021? No, actually. I've been doing this since late 2020. I did this for all of 2021. So, nope. Did not start in 2021. Did I make any payments in 2021 that would require you to fill out a Form 1099? A little bit of an aside. We're going to swing around. You might be asking, what the heck's a Form 1099? Well, 1099 is a series of forms. It covers a lot of different forms. But the ones that they're referencing here are 1099 NEC or 1099M. They used to be the same form, and then the IRS decided to change it up a little bit. And now there's two. So basically, let's say I have an editor who edits my streams, puts them on YouTube. I paid this editor $1,000 in 2021. Well, now I have to give them a 1099 NEC, which stands for non-employee compensation. It's basically a form that you also have to file with the IRS that says, hey, Joe, my editor, made $1,000. I paid Joe $1,000. So then the IRS knows to be looking on Joe's return to see if they see that $1,000. It's basically, it's the buddy system almost for taxes. They want to know how much you pay to other people because they want to make sure those people are reporting their income correctly. So let's say I file a 1099, say, hey, I paid my editor Joe $1,000. And see, I just said 1099 NEC. I know specifically exactly what I'm talking about, but y'all might not, and that's why I'm having this stream. So Joe then receives that 1099 NEC, and Joe files his tax return, and he doesn't put that $1,000 on his tax return. The IRS is gonna go, hey, now Joe, I got word from Prince that you got paid $1,000. Where'd that go on your tax return? And they'll basically file what's called a CP2000. I'm getting off into the weeds. Pardon my rambling as I just talk about taxes. Joe will receive a letter from the IRS that says, hey, Joe, your tax return doesn't match up to what we have. To all the documents that we have for you that were furnished to us, and Joe will take care of that. But let's say I did pay Joe $1,000. So I'm going to say, yes, I was required to file a 1099. Now comes the interesting question of, did you? Did you actually file your 1099s? There is actually the penalty for not filing 1099s. Oh, excuse me, I'm about to hiccup. Has been increasing every year, pretty much, from what I'm aware of, because the IRS really wants to catch people who have self-employment income and owe self-employment taxes that aren't. So, and actually the due date for 1099s is today. But you can always file them late. I believe there's a little bit of a late fee though. There's almost always a late fee. So let's say, yes, I was good and I filed my 1099 NEC for Joe, and I gave Joe his 1099 NEC, and I said, here you go, Joe. So awesome, we are down. That is all of the general information section now. So now we are down in the nitty-gritty of the actual form, which is the actual reporting of income and expenses. So I'm just gonna say real fast, if you do not have a spreadsheet that you keep throughout the year of your income and your expenses, please start doing that this year. You will thank yourself. If you hire someone else to file your taxes, they will thank you. You don't have to get like a whole QuickBooks subscription or any sort of accounting software if you don't do a lot. If you're, if you can keep it on an Excel spreadsheet, you can do that too. In fact, you can use an Excel spreadsheet and the expense categories from a Schedule C and keep all your expenses and income in one place, and you're pretty set. You're doing pretty good. So now that I've said that piece, so let's see, my gross receipts or sales. So if I received a 1099, say from Twitch, 1099 NEC, I receive it from Twitch, and it says, hey, Prince's Cool Streaming Channel, you made $5,000 this year on Twitch. God, if only. So I would put 5000. There's my 5,000. Then it's like returns and allowances. Did I have to return any of my money? No, I didn't. So 5000. No returns. Cost of goods sold. Cost of goods sold is a little bit of a tricky one. It's more for businesses that have like inventory. So like I build birdhouses and I sell them on Etsy. And, I have to spend $1,000 in materials to make $5,000. That kind of stuff is cost of goods sold. For streamers, not really cost of goods sold. So, no cost of goods sold here. So then, my gross profit. Well, guess what? It's $5,000. Any other income? Well, I got from donations, from tips straight to me, I received $20. Someone was feeling generous. So that brings my gross income to 5020. And now we've filled out the income section. Part 1, done with. Doing this by hand really makes you really grateful for software. I don't have to do all the calculations. I just throw it in and it does it all for me, especially as we get down. So if you did have cost of goods sold, it would take care of this part 3, but we don't have cost of goods sold, so we can ignore it. Yeah, this is vehicle, but as streamers, we don't really drive places for work. So don't have to deal with that. So let's go back up to expenses. So basically, a lot of expenses that you could deduct is things that you can prove are necessary for your business. If you can show, if you have proof lined up to say, here's exactly why this game that I bought should be deductible because I use it in my streaming business, and here's me using it. Here's basically other research that shows that other people are doing this. A lot of it is the burden of proof is on you, should you be asked. Because honestly, you could put whatever the hell you want. But if the IRS came and asked and you weren't able to back up what you did, they're going to say you can't do it. They're going to say, well, that $5,000 of that weird carnival ride, the cruise that you took, you can't write that off. That's not for your business. You can't prove that you use that for your business. But if you say, well, actually on that cruise, I made these videos about this cruise and, I used it for this business purpose and you have your proof, well, then you can put what you want. Remember, I'm not giving you tax advice. I'm just sharing the information I have as someone who deals with a lot of taxes. So let's see. So let's say I went and commissioned a bunch of artists. I commissioned a bunch of artists because I wanted my Vtuber out there. I wanted people to see it. More people to see it. I wanted large artists with their large, you know, what's the word I'm looking for? With their large following. I wanted all their followers to see me and to be like, ooh, who's that? And come check me out. That was my plan, was for this to be advertising. So I spent a whopping $520 on advertising. Car and truck expenses. I didn't have any car and truck expenses. I didn't drive anywhere. Commissions and fees. I didn't do any. I had no commissions. That's not something that happens with streamers. Contract labor. This is that 1099 question again, just asking for the monetary value. So I paid Joe, my editor, $1,000. And every year the 1099 amount, so like the amount that you have to pay to basically have to issue a 1099 is set. It's been $600 for a while now. So let's say I paid Jane, my other editor, I only paid her $200. I didn't really like her work. We only did one video together. So I would not have to give Jane a 1099 because it's under the $600 limit. But I only paid Joe $1,000 in this scenario, so $1,000 in our contract labor section. Depletion is specifically, I've only ever seen it used for oil and gas. We're not dealing with oil and gas. Don't put anything in. Depreciation is a whole can of worms that I'm going to talk about in a little bit after we put kind of some more expenses in. So depreciation we'll come back to. Employee benefit programs. I don't have any employees. It's me. It's just me. It's just Prince in this business. So, excuse me, don't have anything to write in there. Any insurance? Did I get insurance for my VTuber? Did I get, insurance in case something happens to my computer? Let's say I did. I spent $200 on insurance. Because, God forbid, if something happened to my computer, I couldn't stream. Any interest? Did I pay any interest on, like, a credit card? But it would have to be. So let's say I have a personal credit card and I buy some business items on it, and then I have interest on my credit card bill. Does that mean I can put all that interest on the Schedule C? No. You can only put the portion of the interest that is related, that is because of the business purchases. So let's say 2/5 of my my credit card bill that month was business purchases. Then I could only take 2/5 of the insurance that they charged that month. However, if it was a only business credit card and they charged me insurance and the only thing on that was business items, 100% of that is you would put there under interest. But I didn't have any credit card interest. Legal and professional services. Did you pay a lawyer? Did you pay a tax professional? Did you pay a bookkeeper, an accountant? That kind of stuff. So I'm going to say, no, I didn't, because I'm my own bookkeeper and I'm my own tax professional. Office expenses. Office expenses are usually like, stuff related to an office. Like did you buy paper clips and stuff like that. Also sometimes included under supplies. It kind of goes wherever it goes. So I didn't buy any office expense. I didn't buy any office supplies, office expenses. We'll leave that empty. Pension and profit sharing. I don't have a pension. I'm self-employed. Rent or lease. This is not the rent that you pay for, say, your apartment. This is if you rent, like, a piece of equipment. Like, let's say I rent a mic arm. Or I rent, stuff like that. For other clients, I've seen it like they have like a agriculture business, and they rented a wood chipper. Stuff like that. So I didn't have any rent. Repairs and maintenance. Well, I did have to take my computer to be repaired. I spent about $100 on that. Stuff like that. Supplies. So here's where I personally can be like, well, I spent $2,000 on games and stuff for my streams, and they're all, see, here's going to be a thing that's going to pop up. They are all 100% business use. Business use percentage, BUP. Very important. BUP, 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 BUP. B-U-P. Very important. Let's say I bought all these games and I used them about 50% for personal use. Let's be real. Well then, $1,000. Oh, goodness. Not crazy, guys. $1,000. Because the business use percentage was 50%. So I take 50% of the total cost, and that's the business use. That's the cost that the business incurred to use the items. It's not terribly difficult once you really start thinking about it. All right. Taxes and licenses. I'm a streamer. There's no licenses. I don't have property taxes to pay. I rent an apartment. Not that you would put property taxes here, but just, taxes. So gonna leave that open. Travel. I didn't go anywhere. It's still COVID. Meals. I did not buy any meals that I used specifically for company stuff. Like, I didn't go out to dinner with someone and discuss company. Discuss things related to Prince's Cool Streaming channel. If I had, and I had all of the proof to say, here's exactly what we talked about during this meal, then I would put that amount in there. But I didn't go out and eat any meals with people. It was COVID. Utilities. This is not for your house. This is not for your home utilities. This is like, it's not often, I don't see it used very often. It's kind of like, oh, I had to buy like gas for my wood chipper that I rented. Stuff like that. That kind of utilities. Wages. Well, I'm not an employer. I didn't pay any wages, so that stays at 0. Other expenses. Let's say I spent $5,000 on other expenses. That's not where that line stops. I want to direct your attention to here. You have to write down exactly what you spent it on. So just like, I scrolled on the wrong section. So just like up here where you had to write, advertising this much, you would have to write down here. So I would do, streaming model. I spent $4,000 on that. Then, let's see what else. Stream graphics. I spent $1,000 on that, and boom, there's my $5,000. And you do have to put total other expenses. 5,000, and that has to match with up here. So then you add everything up, and I did not do round numbers, so give me a second. I actually have to add this up. Plus 1,000 plus 200 plus 100 plus 1,000 plus 5,000. Well, would you look at that? I spent $7,820 in 2021. Damn, Prince's streaming channel. Spending the big bucks. So now, your tentative profit. Well, I spent this much, and I made this much. So actually, I'm at a loss. $2,800. That's a lot of money. That's a lot of money. And that does reduce your taxable income. So if you have a loss, you do want to take it. Oh, I forgot the one thing I wanted to talk. I forgot the other thing I wanted to talk about that I skipped over for a second. Depreciation. Wait a second. Depreciation. Depreciation is specifically used for assets. So if I bought my computer, I wouldn't put it under, you might be like, well, where would I put that? I put a computer. Would I put it under other expenses? No. That is considered an asset. Usually if it's expected to last 5 or more years, that's an asset. 5 or more years and it's like over $100 or something dollars. That's what we often use in my office for it. My office, I say, as if I own it. In the office I work at, as like is this an asset? So like my microphone that I'm talking in right now, that's an asset. I spent over $100 and I expect it to last for more than 5 years. Fingers crossed. My Elgato capture card, that's an asset. Spent over $100 on it. I expect it to last for more than 5 years. So assets are complicated, to say the least. I would, if you are doing your tax return by hand, this is where it gets more complicated. I don't have time to go through all of the persnickety of assets. Basically, what depreciation is it is so say, let's use the example of the microphone. Let's say I spent $200 for this microphone. According to the type of asset it is, and this might sound like a lot of mumbo jumbo for a little bit. This is a computer related asset, which means its life expectancy, according to the IRS, is 5 years. They expect this thing to work over 5 years. So I would take the $200 that I spent on it, and I would only get to take 1/5 of it per year, more or less. This is a very big simplification of it. That's what depreciation is. So I would only put on my Schedule C 1/5 of the cost. For some assets, there is the current law as it currently stands, because God knows that changes, is called 100% bonus depreciation, which is if it's a 15-year life or lower. So like 15, 7, 5, that's kind of the low life years for assets. You can take 100% of the cost and write it off in the first year. It's specific classes of assets only. If you have a lot of assets, you need to either A, use a tax professional, or B, use a software. Because assets are confusing and they can get you tripped up. So let's say I bought a computer and a microphone and an Elgato this year. And altogether, all of those were 100% bonus depreciation eligible items. And I'm electing, I will take my bonus depreciation because you don't have to take it. I would. A lot of times people don't take it if there's tax plans for taking bonus depreciation, not taking bonus depreciation. You can pretty much take bonus depreciation unless you expect weird shit to happen in the future. If you do, please talk to a tax professional. Please talk to a tax professional. We're here for you, please. So let's say I spent a total of $2,000 on computer, Elgato, mic, all that stuff. So would you look at that? My expense total is actually $9,820. Man. I didn't actually select through. Okay, God. All right, so my tentative profit and loss is 9,820 minus 5,020. Man, a loss of $4,800. That's big. That's big. We definitely want to reduce my taxable income by that. Because, man, that's... If I didn't do this, I'd be paying tax on $4,800 more than I should be. Oh my gosh. Taxpayer Bill of Rights. I'm not supposed to be paying tax on more than I truly am. Wait, where is it? Where is it? Taxpayer Bill of Rights. Pay no more than the correct amount of tax. Come on, Prince, get right. So, yeah. So next up is, the next section down is home office. I'm gonna make certain there's not ads going on for a second. Okay. Okay, there's not. Okay, good. Because I wanted to make sure I talked about this when there was not ads, because this is extremely important. The IRS rules for home office is basically the hard and fast rule is it must be a space that you use only for business 100% of the time. So if you ever use your streaming computer for anything other than streaming, you do not have home office. Unfortunately. That's a rough one for a lot of people because they're like, but it's my office. Unfortunately, it's not 100% business exclusive use. So let's say I had a second bedroom that I had a computer in that I didn't do anything but, you know, streaming and streaming related activities on it. You know, I did my social media posts, I, you know, did TikToks, I did video editing all on that computer. And that was the only thing that computer was used for. And that room was only ever used for things related to streaming. That would be a home office. But I'm human and I don't make a lot of money. And my streaming computer also does stuff for me personally. And the space that I use my computer in also is a space that I use personally. Don't have a home office. If you have a corner of your room that you know, only use for streaming, cool. Doesn't have to be a whole room. It can be a portion of a room. But let's say I did. Let's say I have a computer that I don't use for anything other than business. And I have a little section of my apartment that I don't use for anything other than business related activities. So let's say, so there is two ways of doing home office. There's simplified method, which is basically you get a specific amount of money per square foot. Or there is the, basically the full method, which is you add up all the expenses that you use, that you paid basically to have your home. So if it's my apartment, I would add up all the rent, all the utilities, all the internet, all the insurance, all the, you know, any repairs that I did. And let's say my home office was 5% of my home. Well, then all those expenses, I would only take 5%, and I would put that on the Schedule C. But I don't have a home office, so we're just gonna skip that question. So then, there we go. Here's our net effect of our schedule. Don't be mad, Prince. The net effect of our Schedule C. We have a $4,800 loss. That's a big loss. So then, do I have what describes my investment ability or my investment in this activity? So basically, if this one is where we're gonna go to the fun little. We're gonna go. Where are we going? Schedule C. There you go. About Schedule C. They have a whole page. A whole page about this form. They have a whole page for a lot of forms. So here's the instructions. I like the print version because I find it easier to read than trying to figure out the HTML hell. So we're gonna look up what exactly we're looking for. We're looking for at-risk investment. So I'm just gonna search up at risk. All right, and now here we go. Here's the exact instructions for this line. So, figuring your net profit or loss. You know, apply your at-risk rules. All right, cool. Line 32. Here's what we were. Tip: you do not need to complete line 32 if line 7, your gross income, is greater than your expenses. If you have income, you don't have to worry about if you lost the business, how much would you be out? So, at-risk rules. In most cases, if you have a business loss and amounts invested in the business for which you are not at risk, you must complete this form to apply a limitation that may reduce your loss. Such as the following: non-recourse loans. If you don't know what non-recourse is, it's basically, if I didn't pay the loan, they couldn't come back at me. They couldn't come back to me personally, as far as I'm aware. That's what non-recourse means. It's what I've been told it means. Am I using anything borrowed in the business? So basically, is it all my money in the business, or is it other people's money in the business? That's the at risk. So nope, it's 100% my money. I put in all of that money. Damn. So all investment is at risk. And then that's it. We don't have to fill out either of those two. So this would be reported. Oh, I forget which schedule it's on. Yeah, schedule 1, line E. And basically that pulls into your calculation of total income for tax purposes. So this loss just reduced my income by $4,800. That's $4,800 I don't have to pay tax on. Because I spent it in my business. If I, however, let's say I really kicked it out of the park. I made $10,000. I made $10,000 from Twitch. So my income is 180. I did my math incorrectly. I have $180 of income. Whoa! Wow! Here's where the second portion of my introduction tweet comes in. Self-employment taxes. Self-employment taxes are basically, I'm going to say something as if I expect y'all to understand this. It is making up for the FICA tax that your employer did not pay. Your employer being you, because you did not have a W-2 in which the employer is required to pay FICA. FICA is, am I saying, is, hold on a second, my brain is saying, like trying, no, I'm correct, it's FIT and FICA. FIT and FICA. All these fun little anagrams and analogies and what the fuck, what am I trying to say? What? Shorthands. We're just gonna say shorthands because the word is lost in my sauce. So FICA is basically the Social Security and Medicare tax that every single person who makes income kinda, sorta, almost has to pay. That's kind of a broad generalization, but let's say at my job, at my day job, I get paid, let's say I get paid $10,000. I don't get that full $10,000 because my employer has to send my Social Security and my Medicare amounts to the government, paying those amounts for me. every paycheck they come out. And that's not even touching the income that I withhold to be sent to the IRS on my behalf as paying my tax throughout the year. So as a self-employed person, you are making a kind of sort of wage income, except it's not through a W-2. So there is no withholding of your Social Security and Medicare amounts. But the IRS still needs that money. The government still needs that money. So how do they get it? Well, that's self-employment tax. I believe it is something along the lines of like 15.7%? Let me double check that. Self-employment tax percentage. And yes, this is exactly what we do, is we look it up. I wanted to make certain I wasn't going to click on anything weird. So self-employment tax. There's a whole IRS page on it. So if you're confused about self-employment taxes, feel free to read through it. So, yep, self-employment tax is 15.3%. Now, before you freak out, half of that gets basically added as a credit, because it's confusing, but it's acting as if your employer paid it. Self-employment tax is a wild beast. And just know, basically, even though it looks like you're being charged 15.3%, you're really not. You really only are like 7 point whatever percent. I know it's weird. Excuse me. This is a tax that a lot of people aren't aware of when they start making a lot of self-employment money, is that they have self-employment taxes to pay. And basically, if you know you're going to be making a lot of money, the IRS wants you to do basically called quarterly estimated payments. Basically, you'll say, I expect that I'll owe about $10,000 in April. So I'm going to pay, I gave myself a number that's not divisible by 4. 12. I expect I'm going to owe $12,000 in April. I'm going to send payments of $3,000 every quarter to the IRS to pay my tax. And these quarterly estimated payments are where a lot of our clients mess up, because it's not a quarter like you think it's a quarter. Like the first quarterly estimated tax payment is usually tax day. It's April 15th or April 18th this year. So yeah, you have to pay whatever you owe for, 2021 and make a payment towards 2022. Then it's like June. The next one is like June, July. Then it's like September. And then it's January of the next year. If you have a question about quarterly estimated payments, I would highly recommend you talk to a tax professional in your area, especially if you live in a state that has state taxes. Where I live, there are no state taxes, so I haven't even touched on anything about states, because although we work with states and we've done other states in the US, we're not experts in them. And I don't want to speak to anything that would make this be a disservice to y'all. So if you have a state tax, I would highly recommend you talk to a tax professional in your area, especially if you have any sort of city or local tax as well, because that adds on another layer. I almost said another layer of sauce. Yeah, another layer of sauce in the tax pizza. And I don't know what I'm talking about. I don't know where this analogy was trying to go. But yeah. So self-employment tax is big. It's a big thing to be aware of. It's a big thing so that it doesn't come and surprise you. We've had people who suddenly have banger years that they're not expecting, and they get you know, they're like, okay, we're going to owe a lot of tax or owe a lot of income tax, and then they get slain with the self-employment taxes because they weren't ready for it. As always, please reach out to a tax professional, work with a tax professional if you are expecting to make a lot of money and need assistance with dealing with the tax consequences of that. Anything that you're uncertain about the tax consequences of, it is always best to reach out to a tax professional, because this is what they do, this is what we do. We will do the research if we are uncertain. We will look into, I've literally more times than I can count, literally gone into the IRC, which is the Internal Revenue Code, which is the rules of the IRS. Gone into the IRC and read specific sections because we weren't certain what exactly was going to apply. And so, yeah. I went a lot faster than I expected of the things that I wanted to talk about. Did I touch on what I talked about? Yeah, Schedule C and self-employment taxes. I'm like, wait a second. No, wait a second. That's kind of everything that I wanted to touch on. As just kind of a basic crash course into VTuber taxes. VTuber taxes. Self-employment stuff for VTubers. Are there any questions? Does anybody have questions? Else I will possibly call the stream here. It's kind of been almost an hour and a half of me just talking about taxes, which is all I expected it to be, but all right, I'm gonna stretch for a second. Pop back over here for a little bit. Hello, 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 welcome back. Ironically, today I was just, I was actually working on a tax return. It was an S Corp. Oh, I'll just briefly touch on S Corps before I sign off for the night. A lot of people think they need to be an S Corp. They hear a lot about S Corp will save you money, S Corp will do this, S Corp will help you. And there are a lot of S Corp can be extremely beneficial. Yes, S Corp is a business structure that falls under the it's like qualified subchapter S of some IRC that I don't remember off the top of my head. And basically, an S Corp makes your business separate from you, the person. So instead of filing a 1040 and reporting all your stuff there, you, the person, will file a 1040 and you will receive both a W-2 and a K-1 from the S Corp, which will file its own tax return. And a lot of people will go straight into S Corp expecting it to do a lot of help or, you know, be super tax savings, and they don't realize exactly all the work that goes into running an S Corp. And so basically, if you are considering S Corp, I would, gonna sound like a broken record, I would reach out to a tax professional in your area, because it's something that you definitely want to have the full scope of before you get into it. Because there's payroll requirements, there's rules about like being a 2% shareholder, or if you're more than a 2% shareholder, and all sorts of fun tongue twisters, brain teasers of rules. I know I make it sound scary. It's not terribly scary. When you know what you're going into, when you know what you're doing, it's not scary. When you don't know what you're doing, it's scary. And it's always best to, especially with businesses and payroll situations, to always have someone experienced that can help you at the helm. Because a lot of times S Corp is touted as, you know, helpful for every single business, but the only time the times that we really see, like we being the office that I work at, that we see it being helpful is when your company is making 100K or more. I can't remember if it's net or gross. I believe it's net. So if at the bottom of your Schedule C you're making $100,000, S Corp is in the cards, could be in the cards, depending on your, you know, what the outlook of your life looks like, what you want the business to do for you. And that way I would, you know, once again, sound like a fucking broken record, talk to a tax professional in your area. S Corp stuff is not something you want to mess up. And you especially don't want to accidentally make yourself a C Corp, because that can happen. And C Corps are a completely separate beast. But yeah, that's basically everything that I wanted to touch on. I wasn't expecting to stream today. I saw Lucifer and Bub's tweet, and I was like, oh, I have to, you know, slide on as a tax professional. I was literally sitting at my desk. I was sitting at my desk with our tax prep software open. I had a P&L from the business that I was working on open in another screen. I was typing up an email to a client answering a question, and I was like, oh shit, self-employment, VTuber, taxes, that's my wheelhouse. That's like pretty much my wheelhouse. Especially dealing with younger, newer taxpayers, because though this is only like my third year being a taxpayer, third or fourth year being a taxpayer, I've dealt with enough taxes to know what it's like. Yeah, so I think that's pretty much everything. Oh, I'll just close out with another disclaimer and then a news item. So yeah, disclaimer, this is not tax advice. None of this has been tax advice. This has all been me sharing information. I'm not licensed to give tax advice. I cannot give tax advice. I cannot tell you what to do with your taxes. All I can share is information. Information, what I've seen, where to get information, like irs.gov. You can always check irs.gov. They have things in multiple languages. They have pretty much almost instructions for every single form. PDFs of forms. Basically, it's obviously you can check there to figure out most everything. But as always, if you're confused, if you don't know what you're doing, you're scared, you can always reach out to a tax professional. If you are low income, they do have specific centers, I believe, that they specialize in helping low income people with their taxes for either a reduced or no charge, I want to say. Let me double check, because now I'm like, it's low income. I don't remember exactly what it is, and I can't find it off the top of the thing, so I'm just not gonna. Basically, IRS low income, IRS free file. There are resources for everyone. You don't have to, if you're not able to pay like a couple, whatever, how much money it is to get a really good tax professional, there are still good people who do. I realized that the way I worded that just made it sound like the people who do the free reduced filing are not good. That is incorrect. They are good. There are ways to get your taxes done professionally, even if you do not have a lot of money. And I will just leave off, or just about almost an hour 30. I will leave off with the reminder that you cannot commit tax fraud accidentally. You can't. So if you're worried about accidentally committing tax fraud, I will assure you right now, you can't. Deep breaths, it's all gonna be okay. The IRS wants to educate and have people learn how to do it and be, you know, compliant filers in the future. The IRS has a lot of education outreach and all sorts of stuff. And as always, there are tax professionals that you can ask for assistance, for information, for teaching. Yeah, that's really it. I touched on just about everything I want to talk about. No questions. And I did my wrap up. A quick touch on S-Corps and low income filing centers. Yeah, that's it. So let's pop on over here. All right. Well, thank you all so much for coming. I really appreciate it. I was honestly expecting this just to be me talking to myself for about an hour and a half or so. Definitely was an hour and a half. So yeah, if you enjoy my content, if you want to see more of it, you can find me on all sorts of social media and Twitch and YouTube, all under Prince Vtube. I usually stream Friday, Saturday, Sunday. This was a random one-off. I'm gonna attempt to put my schedule up for this week. I might forget. But let me see what else. That's really it. Yeah. All right. Well, I hope you all have a wonderful morning, afternoon, evening, whatever time it is for you. And without any further ado, bye-bye.